But that's the name we got for now, market lunch. So I know it's not the best day. It's actually been not the best week for the AI market. But still, we continue to hear a lot of great things about the AI space. I mean, we just saw a deal with OpenAI and Meta. We saw not OpenAI, Meta, OpenAI and Amazon. We saw reports of Meta and Google creating more news as well. So the overall market, I think, is still alive. Stock prices, though, need to do something. But I hope everybody's having a good Friday. And let's see. Like always, this is going to be an hour of Q&A session. So if you have any comments, feel free to let me know. Let's just take a closer look. What's going on, Big Buck? How's everything? Good morning. How are you? I am doing good. I'm doing well, Big Buck. Obviously, I wish things were better in regards to stock prices, but if you're a Coreweave investor, these are prices we last saw a month or 2 months ago. But good morning, Daniel. Good morning, CSS, Counter-Strike, no, CSS, Volton. But how are you guys doing? Anything you guys want to talk about? Any question you guys have? We do have a lot of pain in a lot of stocks right now. Coreweave down 17%, Duolingo down 14%, Nebius unfortunately falling down on Coreweave right now, down 8%. Iran down roughly 7%. Navitas, not sure why Navitas would be down on any of the news. Maybe it could just be just because it's a high beta name, down roughly 5%. Applied Digital down 5%. Shopify down 4%. Software space is also down yesterday, right? Because of XYZ laying off employees and blaming the AI market. Ambarella reported earnings yesterday. I know this is one that follows the compute edge or AI edge, I think in automotive and maybe robotics. I know they do kind of edge AI chips with vision. So that one's down roughly 16%. Air Technologies kind of giving back to the 30s. I can't believe we were in the 41s with Air Test System, but Air Test Systems down 3%. Cloudflare is still seeing some pain here, 3.7%. Oracle, I'm gonna guess, is just the overall sentiment towards Coreweave that's just driving a lot of these neo cloud players down. But like, why would a Synopsys be down roughly 3%? What do they have to do with a lot of these things? Is there any green? I am honestly shocked that Dell Technologies is up roughly 23%. I mean 20%, right? Up $23. So that's wild there. Super Micro getting a little bit of that hit, and we saw some mass. So it's crazy. I mean, Dell Technologies is up because they mentioned that demand for AI servers is like crazy. But then AI companies are down because it's like AI isn't really a thing anymore. So it's the market just wants to give to those players. Why is tech down 30 to 40% from highs? I mean, I think if we look at the big tech, I don't know which one you're talking about, CSS. But I think if we look at the big tech, if we look at companies like Amazon, right? Amazon, even though they did announce Amazon right now, right, from its year, down 17%. Microsoft from its year, let's look, from its 52-week high, down 27%. I'm going to guess Meta is also down a nice amount from its 52-week year. Down about 18%, right? Nvidia down about 12%. I think for a lot of the hyperscalers, the main reason is the market is really fearful. Again, I think of ROI. CapEx has grown dramatically to some crazy levels. And the market is fearful that are they going to get a return on this AI solutions, even in this AI infrastructure, even though we see that they are. The market is also fearful of certain players going free cash flow negative. I mean, for example, Amazon today just invested $30 billion on OpenAI, right? Was it 30 billion? 15? I forget how much did they invest. $15 billion initial investment starting right now. Does Amazon now go negative cash flow if this 15 billion is direct cash and it goes out this year? Does it go negative cash flow this year for Amazon? Um, but I think that is the fear. It's like what you guys are spending crazy amount of money. Um, you guys have to stop soon, and this year's gonna suck for you guys because you're just not returning it to the shareholders. And I think for Nvidia, it's the opposite. It's like while they're spending a lot of money this year, I think next year they're not going to spend as much. So the market knows that something is going to happen. They just don't know what's going to happen. So I think they're putting some form of risk portfolio on everything. Um, but yeah, if you guys have any questions, feel free to let me know. Ed, is the sale because Nvidia didn't hit 20 as apparently that was an option price that needed to hit, or is that they're all nuts? I don't know. There probably could be something. I don't follow like the options market, Ed, or know how big it could impact overall equities. So I can't say anything in regards to it if it's something with option plays. I would say I highly doubt it. I do think there's just some form of risk aversion being added onto a lot of the big tech players and the AI market just because there's so much fear. For example, yesterday we got the XYZ um, discussion of them laying off I forget how many people, and the stock went up dramatically. And in the press release that Jack Dorsey mentioned, it was like it's mainly driven by AI growth. So the market is like, wait, does this mean that we're going to start to see more AI, more people losing their jobs because of AI? And I think AI is going to be just the easy way out for a lot of CEOs that might have over over hired. And then but the market is going to see that as negative optics. I think there's just so we don't. I think there's just so much risk on everything. Um, It's simple. Markets got ahead of themselves. It's not rocket science. I think it's hard to say that, right, Pine? If you're trading at forward PE ratios of 22s, 23s, 24s, that to me doesn't tell me the market is ahead of itself. A market ahead of itself is giving me a forward PE ratios of 40s or 50s or even high 30s. The max sevens, I don't see that. So I don't see the market getting ahead of itself. Um, it's not rocket science. I think if it's as simple as that, mm, it could be as simple as that, but the data doesn't show it to me, right? If forward valuations were a lot more expensive, um, let's see here. Natalia here. Jose, question: it's not that a concern that Corey CEO Mike unloads $15 million every month in shares on stock price upswing. This is the reason I prefer Nebius. Market shows Corey CEO trades. I mean, I guess everybody should have their own way of investing, right? And how they trust management. To me, I don't see this too much as a bearish case for me, especially if I see the business executing, right? I don't see it. But I feel like everybody should have their own um everybody should have their own style. I don't if CEO insider trading is a big thing, then yeah, that should be a concern for you. For me, it's not. It's definitely not. Um and I'm not saying if it is, it's a bad thing. I think everybody has their own preferred way of how they look into certain things. And to me, it's just the tailwind of the AI market is so high, um, and so strong. This is not rocket science. I don't think so. It's called finances, right? I think rocket science is a whole different. It's a whole different theme, because they want to make up excuses for you to sell, lol. And after you lose money, they pick up shares and pump it up, lol. They have money and they could talk whatever. I don't know who we're talking about, Leon. Who's they? Whenever we give money to those guys, give power to those fund managers. Who's those guys, Lee's? Who are those guys? Um, let's see what else. If I missed the question, feel free. What price do you have in mind for 5 years out for Nvidia? Simpson, it's an actual price. I mean, I think 5 years out, it's crazy to have a. How can you in an AI market like this, Simpson? I think anybody giving you a 5 year price target is going to be completely crazy because just AI innovation continues to move that you don't know where it's going to be 2 to 3 years from now, right? You don't know. Uh, you don't know you don't know where it's going to go. So I don't usually put price targets on companies that I own for any year. What I tend to do is do I see this tailwind being outperforming growth that the overall market is going to see. And if it does, it means it's going to outperform the overall stock market. It's going to perform the overall S&Ps, the overall Qs. And if I believe that's the case based on the trends, based on the financial information we're getting from these companies, then I would continue to hold. For me, Nvidia is going to be one of those players that for the next 5 years continues to outperform the S&P 500, the Qs, and various other indexes. Um, let's see. The market isn't ahead of itself. This has never happened before, and people are nervous that the midterm sees a big slow in capex, which has negative effect on picks and shovels. I think this is more the thing, Jason. But again, we don't know. Everybody can have their own discussions. Um, but I think it's more of this: is no one knows what is happening in this technology evolution, and you have massive bears that think the cycle is almost done. And then you have ultra bulls that think the cycle is just getting started. And it's like a multi-year cycle. And then you have certain people that are like, at least for the next 2 years, I think we still have time. I feel like I fall into that. I feel like at least based on the data, we still have 2 years of this to continue to grow. And as we see AI continue to innovate, that can stand a little bit longer, but it's all based on AI innovation. But I think the market is nervous. I think they think that something is gonna affect this market. They just don't know what. And any little news, everybody has weekends. I think that's the problem. I think even even the big boys have weekends right now. That they think everything is gonna create a deep sea crash, and they just very trigger happy right now. It might not be ahead of itself now, but it was in November. That's probably true. Pin Rose, Pine Rose. I'm pretty sure it's Pine Rose, but I don't know why I'm saying Pin. But maybe I'm just reading Pin Rose, but I'm thinking Pine Rose. Um, Maybe November, right? We did see a lot of these stocks up, like what Corey was like in the 130s. Nebius was probably in the 120s. Iron was like in the 60s. I think there was a huge ahead of itself in probably October and November. I could go with that, Pine. And I feel like the market tends to do that, right? It kind of stretches, and it stretches too high, and then it kind of needs to go back to the average. Pine Rose, yeah. I'm just messing here, Pine Rose. But then it's like, and then it starts to do the opposite, right? Then it stretches too much to the bottom. And I think that's what we're seeing right now, right? I think we're stretching too much to the bottom, and then eventually we end up going back and shifting. I mean, I feel like that happens a lot in the overall market. Is you see an overreaction to either side, and then when we're stretched like this, right? When we're stretched like this, everybody's saying, all these companies are going to go to $1,000 or a bazillion trillion dollars in the next few quarters. And then when we're like this, is what we're seeing right now, where everybody's like, I told you we should be shorting stocks. AI market is dead. Um, so you can definitely see the sentiment in people just based on stock prices. And that's why you just need to just ride it along and just keep on with your thesis. Um, Baby Bull here. Welcome, Tim. Been holding my shares since January. What are we talking about? Nvidia? Congratulations. January. Nice. Um, I don't, Jason, I agree. I don't think the cycle is anywhere near done. Um, I don't think the cycle is anywhere near done. I just think in this AI market, one way that you know it's going to continue to accelerate is to see the innovation happening, like actually see that innovation. Like we saw that innovation with AI agents just pop up in this past month or so with Claudebot, now Perplexity Computer, Codex 3.1. Those kind of innovations give you, oh, okay, then I can see this lasting another 6 months. Now, from there on, or another 12 months, or another 18 months, or another 2 years. But then eventually we need to see more improvements that gives us the opportunity to see the cycle last longer and longer. For this cycle to continue to go on, Jason, I think AI innovation needs to continue. If we ever see a stalemate in AI innovation, that's when I would start to be a little bit worried of capex. But we're not seeing that right now. We're definitely not seeing that. Um, Jose, what do you think of all these lawsuits for substantial losses? It's so bad now. It seems like whenever stocks go, I think that's I think it is dumb, right? Unless there's an actual cause or an actual thing, it's like, I mean, unfortunately, you can sue for anything. Even Elon kind of even posted something about this. I know maybe some people aren't Elon's fans, but just to kind of get a perspective of someone who has crazy money, we saw that Micron had a fab being delayed because of lawsuits. And that is going to create maybe some pressure on memory things because you won't have the fab open as early as you thought you were. And Elon mentioned this is usually one of the biggest constraints that happen in the United States is due to lawsuits. It does kind of create a lot of pressure. And it's like now you're losing because you ended up buying a company and the stock went down, even though it's like such a volatile market. If you understood the risk, if the company gives you the risk, I mean, obviously you can sue, but it's just I think it's stupid. Unless the CEO literally did something crazy that they were like, yeah, we're going to grow 100% this year. And they knew that all their orders were being canceled nonstop. Um, Obviously, there has to be a in between, right? I think you have to punish when it's straight out lies, but when it's just risk that comes from owning a business and management doesn't know, then I think I don't see why one would sue. Uh, Someone said just blame the algos. Like a myth. It's the algos' fault. Uh, are they in the chat with us right now? The fund managers. I figured so. I always just I find it funny when it's like, who is they? Who should we be angry at? Uh just blame just blame the algos. Like a myth does. Um Star is giving us some February is historically the second worst month for S&P 500. Uh, Buck, what is the first? Is it what's the first worst month? What's the number one? Is hopefully it's not March, right? 2023 gainer. Heading to the eye doctor. All I can see is red. Were you going to the eye doctor when all you can see is green? See, you can't play it both ways. You can't play it both ways. Um, First is September. Okay, the first. Uh, so February is historically the second worst month. Um, First is September. What is third? Just curious. That would be the last one. That's the last one I'm gonna ask. What is third in forms of the worst month ever? Let's see. One bad coup. One bad LX coup. LX coup. LX coup. Said like the EKG coops, EK coops, EG coops, the Honda coops, LX coops. All right, never mind. One bad Friday, happy Friday. If someone doesn't want concentration in a single name, would you say VGT is a good ETF? Yeah, I mean, let's pull up VGT. I'm curious to see what VGT has, how weighted it is. I really want to look at the composition. VGT composition. Let's go to fiscal.ai. If you want great charts, go to fiscal.ai/Jose for 15% off. Do VGT Vanguard information. Oh wow! I mean, is VGT? Is this a S&P 500? No, it's this just technology, Vanguard Information Technology Index Fund. I mean, yeah, I mean, why wouldn't you? If you didn't want exposure to everybody, like this doesn't Nvidia 18%, Apple 15%, Microsoft 10%, Broadcom 4.3%, Micron. I think this is a great way for the semiconductor and tech market for sure. Right? You kind of get you get exposure, good diversification of everything. In all honesty, I wouldn't mind ETF where the max sevens are just a lot higher, right? I think like why wouldn't Google and Amazon be here or Meta, right? Like I would want Google, Amazon, and Meta. So a holding that has like a lot of the max sevens as a top position, but you still have a nice amount of just tech in general. Many people are just gonna say, isn't that just the Qs, Jose? I mean, I guess you could just go to Qs, but just right. I've never really seen the overall breakdown of these players. QQs, QQM. See, like I would prefer just the Qs, right? I mean, I think the Qs is better than the VGT. Obviously, with the VGT, you do get I'm gonna guess the expense ratio is so much cheaper. But like something that follows the Qs, Vanguard. Well, Vanguard most likely has something that follows the Qs. Um, but I like this a little bit better. I would do like if it was me, I would personally do like the Qs and SMH or a SOXX or something like that. And hold on, let me just see. I think my babysitter sent a message. Thanks for sorry, let me just respond to some messages really quick. Give me one quick second. I just need to say something to the babysitter. I think she's all right. Sorry about that. But yeah, I think I would do more like the Qs, and I would do like a semiconductor ETF. That's how I would play it. Let's see. First, Jose, happy Friday, brother. What are the last buys ads you have done? I think the last buys and ads I've done are, let me see my overall portfolio. I know a lot of the Max 7s. I like Amazon. The Amazons, the Microsofts have been really good in my ads. I don't think I've really purchased much. And the main reason I haven't purchased much, Daniel, is a lot of my purchasing happened in December for high beta names. For high beta names, I think we saw a lot of I saw we like Coreweave was around $70, even 68 in like December. We saw Nebius down a lot during December. So even though we're seeing pullbacks, it's all at levels we saw in December. So for me, I haven't really been too excited on the high beta names since I did pretty aggressive in December. I think the more aggressive, I'm trying to find fidelity here. My apologies. I think the more aggressive has been the Max 7s, as I think the Max 7s are looking attractive, right, Daniel? So that's the main reason. It's like, if it's another dip, Jose, why don't you buy it? I mean, I bought the dip in damn December. It's not, I don't need to be buying every single dip. Right. Like my portfolio is still higher than where we were on those lows that we saw in December. So it's like, I don't need to replicate. Let me just see active. How do I freaking look? This is how often I check my portfolio. And how do I look at activities, past buys? But I would say, yes, the Max 7s. And there were a few other stocks that I purchased. Form was one that I purchased. Simo was one that I recently purchased. Marvell was one that I recently purchased. And then the Max 7s, right? The Max 7s. I think Amazon and Microsoft to me are ridiculous right now. Are ridiculous. Meta also. Meta. I don't think I purchased Meta though. But those would be the ones I'm there. Nice, Jonas. Way to tell everybody, Jonas. Jonas over here had his gut telling him to sell, and he didn't want to tell anybody. I wouldn't have sold anyways. I mean, it's like I mentioned, for Coreweave investors, if you've been a Coreweave investor, these are prices we saw like February 5th. February 5th, we were sitting at $74. January, like December, we were sitting at 71. It's like it seems crazy, but when you've been riding this one for a while here, it's like, is it really that crazy? I could have just bought in December, closed my portfolio, and opened today, and it would be still a little bit higher than it was in December. So it's like, I don't know. Marvell, interesting. I mean, Marvell, the OpenAI and Amazon today announced the deal, right? And OpenAI is going to be using. I didn't buy it today, right? Not today, but OpenAI made a deal with AWS. Amazon is investing $50 billion. Did you guys see this? $50 billion they invested. Um, 15 billion is coming initially, and then the 35 billion over the coming months. But OpenAI is going to consume 2 gigawatts of Trainium, Trainium 3s, and they're also going to work on Trainium 4s. And we know Marvell is still has part of that system. So with considering other markets during this tech uncertainty, FTC 100 up 10% year to date, and there's very little tech. Nice side position. Jason, let's look at this one. Is this the same Jason? That's no. Jonas was the one that did it. Oh, before we go into this, let's stay here with this Amazon thing. One thing though I hate about OpenAI and the way they make deals, they like to make deals with big numbers. Right. So OpenAI and AWS are expanding their existing 38 billion multi-year agreement by $100 billion over 8 years. This is where I think OpenAI needs to relax, right? It's like the markets, and because sometimes I think it's because the market overthinks this, right? So when people look at it, 100 billion over 8 years, that means 100 divided by 8, that's 12.5 billion. How is OpenAI going to spend 12.5 billion a year when they need to spend this much money? I don't even know what I'm putting some voice like that. That's whoever's talking in my mind. Is like, why is OpenAI? How can OpenAI spend 12.5 billion here and then money here and here and here and here and here? But it's like a ice cream cone, right? The ice cream cone is very thin in the bottom, but the higher you go in the ice cream cone, the larger it gets. And that's exactly how these investments are from OpenAI. Right now, it might be like $5 billion. Next year might be $10 billion, then $20 billion, then $30 billion, until eventually you have that full contract of $100 billion. But it's like when you say it like this, $100 billion in 8 years, it makes it seem a lot scarier in the short term, where a lot of this is dependent on the long term of things. AB, did I buy Coreweave or Nebius? Jose, I had not bought either, right? I mean, like I mentioned, Nebius, right? Nebius just a few after earnings. I think after earnings, I picked up Nebius. There was that short, right? It was like after Nebius reported earnings, that stock went down a nice amount, right? This is earnings. This is why, again, it's like I don't really move on in the neo cloud space. A 10% movement seems like crazy, but is it really that crazy? Like, I mean, Nebius, we had it at just in the past 30 days, we had it at 73. We had it at 86. We had it at 89, still much higher. So like, for me, it's like, no, I don't, for me right now, I wouldn't buy Nebius because I already have a nice position. In the past 6 months, right, we've seen it at 85, 83s. With Coreweave, I've purchased at these levels during the December. My cost basis is still much higher than this. I think my cost basis is like 91, but it's like, the position size and portfolio allocation, I might not mind dollar cost averaging a little bit here to increase that cost basis, but it's like, it's just with this game. It's just with this neo cloud players. This is going to be a very volatile space. Like I said, I really just opened on my portfolio. And it's like, okay, I mean, we're still higher than when we were in December short. So I'm not too faced on buying right now. Wave, because I'm riding it on waves. Yeah, Jonas. I mean, for me, this is probably one of the biggest reasons I have to pay some crazy taxes this year is going to be Coreweave, because we bought here and we sold this wave up. Um, so it's going to be one of my biggest short-term gains that we saw this year. So Coreweave, but from here on out, this is, I think when we started to see this, it's like, to me, I do believe there's a long-term opportunity on this one. And it's not like I had it here, right? It's like I sold it, I didn't rebuy until the 90s with Coreweave. Microsoft seems very lucrative. I think Microsoft and Amazon are really good. I think Amazon could definitely get punished a lot because of that free cash flow that's most likely going to go negative. Um, but I think it's boring, but I think Max Sevens are going to be the real winners with these valuations right now. Most analysts do not have skin in the game, so that's a decision you got to make for yourself. If you trust their take, also most are looking out a year, not a few weeks. Yeah, and still, I mean, I still think even looking out a year, 12 months is pretty crazy. I averaged up at 281, and Nebius won't buy above 80 anymore. Fine. I guess at the end of the day, it's always just about allocation too, right? It's like, are you happy with how much you own? Their point is Max 7 spent too much, and the ROI is not much. The spending does not match. I mean, it's not going to match. I also kind of, this kind of freaks me out a little bit. Not freaks me out. I don't get what people expect. Do you expect it's like, do analysts expect for you to buy a GPU and in month one, in quarter one, you have or your ROI right off the bat? Like that's not how things work, right? It's like you buy a house and you finance a house to rent it out. Are you positive free cash flow on the first day? No, definitely not. It probably is going to take you a few years to get positive free cash flow, depending on how much you put down as a down payment. Obviously, if you pay everything up front, you're positive in free cash flow, but are you great in ROI with that kind of investment if you put all that equity at once? No. So it's like, why would a GPU or something like this or a cloud be the same thing? How would you expect someone to make a data center and by quarter one, you're saying, you know what, all this money we spent on GPUs, I'm making all the money already by week 3. Like, it takes time. I feel like it's weird. It's weird. It's just weird. It's impatience. Banana Man doesn't know what he's talking about. Who's Banana Man? Banana Man. Oh, okay. That man. I don't know. I think he was sometimes also he might just be talking about what is happening or how the optics is. It might not be Banana Meatball's actual take, right? Let's give him the benefit of the doubt. Hermoso, Hermosillo, the Hermosillo. Um, Nice. Our guy Jose knows the real estate investor market. Cool. I don't know it. I mean, it just make. I mean, I don't. I don't know it, but it's like you don't expect to be right if you buy a house in any form of investment, right? In anything, in any business. If you start a business, you're not going to be positive free cash flow or positive in the first few weeks, the first quarter or not. I mean, you take out these loans, you make that money, and eventually you end up doing well. Um, Tim, Tim, which indexes will y'all choose for 30 plus years of growth? My only index is currently is VT. New to this game and generally risk adverse. Any advice is appreciated. Not advice, just commentary, Tim. Just commentary. Um, for me, I mean, if I didn't want to go into individual stocks, what is VT? Is that very similar to the VTG that we just looked at? Um, Vanguard Total World. Okay, that's the Vanguard Total World. I mean, I think another one people would choose would be this one, Tim, the blue, right? It's the S&P 500. Um, the other one that I think, BGT, I think it's another way if you want to play the technology space. I mean, we just learned a little bit about that. I personally, though, so I'm just sticking with Vanguard. I think Qs are also cool. I mean, we saw the breakdown there. If you want more, um, QQM. Um, Also, no, I don't mind the QQMs too. Um, QQQM. And then for me, a semiconductor ETF. I would feel like, hey, maybe I want to be a semiconductor a market investor. I don't want to invest in them individually. So SOXX, SOXQ, I think, is SOXQ. There's a lot of them in there. XOXQ looks a lot more diversified, right? 11% Nvidia, 6% Broadcom, 6.4% AMD, 6% Micron. But ISV, I mean, I guess if you're into the stock market and into the, it's not ISV, ISVS, software ETFs. I mean, you can find ETFs for everything. But would love to hear what people recommend for our person, Tim. You can always roll your short-term gains if you know how to trade option leaves. I guess so. Baby steps. Baby steps is good. Super Micro greater than Dell. Is it HP? Is it HP? The market doesn't think so today. Not today. I wonder what if margins was a big difference here. Let's jump into fiscal. Were we in fiscal.ai? Yeah. I'm curious to see gross margins for these two players. We don't need this. We don't need this. All right, we're gonna look at Dow. Let's just go gross margins, gross profit margins. Let's look at Dow. And let's look at Super Micro. Let's look. What are we looking at here? Is this last 12 months? Can I? Yeah. Let's look at quarterly. I mean, I guess this is the scary thing with Super Micro, right? It's this right here. Just look at that massive decrease in just gross profit margins. Like at least Dell has maintained it pretty well. There's been a bit of a downcrease, but you're still sitting in the 20%. Where Micron, they peaked at like 18%, almost so close to Dell, right? They could have grabbed Dell, kissed it, and touched it and everything. And it's like, psych, now you guys are nowhere near. So I think this is what the market is punishing Super Micro and giving the benefit of the doubt to Dell. Jose, do you think Coreweave going for doubling its debt to grow? Do you think this will overshadow its potential? Should we choose Nvidia over Coreweave? Hermoso. I mean, first, I would always choose Nvidia over Coreweave. Coreweave is my AI infrastructure play. But the AI infrastructure market is a lot more competitive, right? I wouldn't put these in the market, right? I wouldn't put these in a comparison against each other. I personally want an aggressive player in the infrastructure play, one that is growing at massive levels and the one that has an amazing track record with their customers and with Nvidia on how they're doing things, right? So if I want you to be aggressive, you're going to be increasing your debt. You're going to be spending a lot of money. It's the way, again, if you're going to be aggressive, that's the only way you can do it. You can't be aggressive and not raise debt and not do other things to the levels that Coreweave is doing. So it's like, that's the risk. Will it overshadow it? Probably. I think right now in this HP, sorry, I'll go to HP. So I think in this overall market that we're in right now, where there's this fear of ROI and everything, and are you over investing? Yes, the debt is going to overshadow its potential. When will the market optics change? I don't know. But I believe the amount of gigawatts that CoreWeave is going to be building, and their partnership with Nvidia is what I see being a long-term win. Eventually the sun comes out. No, eventually the sun goes down and there's no more shadows. I don't know. I didn't know where I was going to go with that shadow play. But short term, I do think at the moment debt is going to continue to overshadow its potential. HP over here, did you won't make sense to look at margins right now Super Micro recently said their margins will increase in their latest EC earnings call. But I think they've been saying that over time, right? HP, it's like to me, it's manage management selling, management buying isn't something I look at, but management trust is. What have they said during prior earnings that is different from what the results are? And I feel like Supermicro has said numerous times in the past few quarters that their margins will increase. And we continue to see either this stalemate or this decrease. So for me, it's just like the trust isn't there from prior calls, right? If maybe I was just listening to the call for the first time this time, maybe if I only heard it once, definitely. But I mean, the great thing about Supermicro, and I think eventually it will happen, right? Eventually it will happen. Uh, but it's like if I would have trusted them in quarter 3 and quarter 4 of 2024, it would have sucked for me on it, right? Dell will also, and I don't own either. I don't own either Dell or Supermicro. I'm just not a fan of that part of the business. Um, Dell will also be getting paid on the coming PC cycle in additions to data center and other stuff that they have going on. For real, super promise. For real? Is that what FR means? I'm hoping for real super promise. Are you super promising me this, Daniel? Um, The only thing I wonder if they said it during the call. What do they say about the consumer market? Let's actually. I'm curious. I'm curious. Let's see if they said anything about the consumer market. Because I'm guessing with memory prices, what was said about the consumer market. More importantly, anything about memory prices and memory constraints. Bum bum bum. All right, let's see what that says. Um, For real, super. All right, it was. Um, all right, I'm curious to see what they said here on. So the consumer market essentially flat over a year, while full year consumer revenue declined 8%. Despite the revenue figures, management flagged an important underlying positive. Demand grew for the second consecutive quarter, supported by strength in gaming and traction at the lower end of the market. On the pricing side, Dell delayed implementing PC price increases until January 6th to preserve share momentum and drive growth. The company is guiding for only 1% consumer revenue growth for fiscal year 2027, with unit volumes expected to be down roughly 11 to 12%, implying the difference is absorbed by rising average selling prices due to memory cost inflation. Okay. So memory prices was dominant theme throughout the call. Interesting. DRAM are up nearly 5.5x over the last 6 months. NAND up nearly 4x over the last 6 months. Industry analysts for DRAM prices increased quarter 2 up to 20 to 50%. Quarter 3 up 15, blah, blah, blah. Dell changed server pricing on December 10th and PC pricing on January 6th, calling on lessons learned during COVID era. Actions taken include list price changes across the board, compressed discounting, shortest ever quote validity periods. Okay, nice. So if they give you a quote, it's only going to last for like a week. Reduction of promotions and special pricings, moving to discount off list price models. See, margins held at mid-single digits. That's another thing though, right? I guess that's their margins are still pretty kind of on track with Super Micro, mid-single digits. And will remain there. Memory cost impacts were described as less of a concern here relative to the massive demand. Boom, 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 boom. They'll emphasize it has long-term agreements and capacity agreements. So I mean, what I just wanted to see was how was the consumer market dealing, right? The consumer market seems to be um, pretty weak for 2027, right? It seems like no AI PC cycle should really happen in 2026 due to the memory shortage, right? Because they actually expect unit shipments to go down. Proliferating all data centers due to mismanagement. What's mismanagement? I feel like people just like to repeat things, but they don't even know like the difference between Coreweave and Nebius. You know, one thing I don't ever hear anybody talk about, like Nebius was down after earnings. Like how many people were like, killed Nebius because Nebius was down after earnings. You know, Nebius management also, they promised certain things in quarter 3 that they didn't show in quarter 4, but you never hear anybody talk about that. It's people, I don't know, people are just biased on their own things. But it's like there were a few things that quarter 3 that Nebius promised, and then quarter 4 they never mentioned it again. Makes sense with memory. Thanks for the dive. Yeah, no problem, Daniel. Um, damn, Daniel. Yeah, I mean the memory. I think the consumer tech stocks, I think are not going to have the best year due to memory prices and memory shortages. I think we heard it from, I forget who else we heard it here from, but not just Dell. Um, not just that. Hi Jose, thank you a lot. If you have 10,000 USD, is that 10,000, and starting investing, um, what you are going to do with your style? With my style, 10,000. I think I would do a lot of the max sevens. Let's see, 10,000. I think first I would limit to about 10 shares, 10, not 10 shares, to maybe 10 companies at most. I would have some form of Nvidia, Amazon, and Microsoft as my max sevens. Maybe some Meta, maybe those four. I would like to get a semiconductor ETF, so like a SMH. Um, I would like to semiconductor ETF. If I really am not certain of the overall space or some of the smaller stocks, I would probably just go maybe with a index as well. So either the Qs or the S&P 500. That's already six shares. Then I personally like my high growth plays of AMD and CoreWeave. So now that's 8 plays. Maybe I would just stick with those 8. That would be me. That would be me. He asked on my, but if I was completely new and if I didn't know anything and I knew I didn't know anything, I think I would just go with ETFs or indexes. Debt growing more than revenue. But I think this, again, it's like, if you want to build out, I mean, it's like people, I don't know, I feel like, do people not know how businesses run? Like, if you want to be aggressive, obviously you're going to increase your debt faster than revenue. If you want to be aggressive, there's different ways to play a business. You can play the aggressive, you can play the conservative route, you can play somewhere in between. If you play whichever way you play, you have to understand, is there a tailwind behind it or not? And it's yeah, I guess it's I think the market, I don't know. This is a fun thing about the market is the market is it's funner to own businesses when you kind of understand where they are in their overall cycle. Like, what are they trying to do? What is their goal? Oh, they're trying to grow at a faster rate than anybody else. How can you grow at a faster rate? Oh, maybe you have to invest a lot more in capex and you have to invest a lot more in infrastructure and all this than all the other players. But what comes with the side effect of that? Oh, it increases your debt. It's like when you understand, when your brain moves a little bit and you kind of spin it, just make it work a little bit, a lot of things make sense. Jose, have you checked SES AI? No, it's a Microsoft. Nope, I have not followed this one. Thoughts on TSM? I mean, I'm bullish semiconductor market. I'm bullish in the semiconductor market. It's so TSM is gonna go with it, but I've talked about it in the past, Adrian. I prefer a semiconductor ETF over TSM, just because TSM is pretty much the whole market itself. Um, but if I had TSM in my portfolio, would I be angry and would I sell out? No, definitely not. But right now, I would rather just buy a semiconductor ETF. Arista Networks. I think this is it. As you make profits by individual stocks, I think this was kind of correlated to the person that was just starting. I think if you're just starting off, I would say just focus most of your money on an index. On an index. maybe out of that 10,000, 8 to 9,000 on an index, in a little bit on individual plays. So you can learn how the market volatility works. But starting off, you're going to make mistakes. Don't get discouraged with the mistakes. Nvidia owns a bunch of Coreweave. Why would you buy Coreweave? Easy. I mean, wouldn't you want the if Coreweave goes up 100% in theory, let's just say, it's only going to go from $8 billion. What does Nvidia own? About $8 billion. So from $8 billion to $16 billion. That's not going to make much of a difference to Nvidia's core value. Nvidia is not going to go. It's going to go from $4.5 trillion to $4.508 trillion. Like, it's not. There's no benefit there. Individually, though, if I buy individually, if the stock goes up, I get a lot better asset return. PQQQ is horrible for long-term holds if you do not understand how the daily resets work on leverage ETFs. Was someone talking about leverage ETF, Crocker? Yeah, I'm not a fan of leverage ETFs. I think I would never, for long-term holds, I would never do a leverage ETF. It would be plain vanilla ETFs. Boring and slow. Boring and boring. Boring and boring is unleveraged boring. Most of my money is, I think, the best thing here. I'm not scared. I just bought 5,000 shares at 80. Nice. Hopefully no one said you were scared. There shouldn't be anyone. I think it's, and if someone doesn't buy Coreweave, I don't think it's bad either. I think everybody needs to have their own reasoning for not owning a stock. But I think putting like a bearish thesis just because you don't understand the stock is not the way to go about it. Be like, hey, mismanagement because it's growing debt faster than revenue. Like, is that really mismanagement? It's management is going that way. They're doing exactly what they're telling us they're going to do. You should say, Coreweave, I don't own because I don't like the way they're running it. But I don't think that's mismanagement. It's like, it's too aggressive for me. It could be too aggressive for you. That's okay. Everybody doesn't need to own the same stocks. Um, how many more times do you think AMD can make these right now? I don't know. Do you know it's not going to deal a deal like this with Oracle. With OpenAI and Meta, I think it did it uniquely because they were model companies. So it's not, I don't think they're doing it for the cloud server providers. I think they're doing it for the model companies because the model companies can help them even more with development of the chip. Um, right. So Oracle doesn't give them anything outside of just buying more stock, buying more chips. And for them, that doesn't make sense. AMD with Meta and with OpenAI is to help understand where the workloads are going in the future, how to customize and enable their chips to go in that direction to make it a little bit more competitive over time. So if we were to see this, I actually only think we might see it one more time, and that is with Anthropic or with XAI. So maybe two more times if we see it. I don't think it's gonna happen. I don't think it's gonna happen. But if it was, I think we would see it. It has to be with a big model maker. So Anthropic or XAI, if it does happen. I don't know if Anthropic needs it, right? Because Anthropic has TPUs, they have Trainiums, and they have NVIDIA GPUs. Do they need more compute than that? With OpenAI, with XAI, though, we've seen that XAI has actually gone to a lot of AMD presentations. So maybe XAI. I'm calling it XAI. XAI is going to be the third and probably last. Slow and boring is fun, right? I mean, like for me, I think right now the real slow and boring is the Max 7s. I think those is like, why would I want to risk anywhere else? It's like, just give me better returns than the overall market in the next 5 years. And I think most of the Mag 7s will do this. Coreweave is down 60% from highs. Any change we make it? I mean, there's always a chance, right? The market is very volatile in both directions, right? You can see, would I bet my money? Would I say? I'm just saying it's not impossible with any form of just market news. Let's say there's some they announced some delay data centers came on a lot faster than expected. Let's say the software revenue that they're seeing is a lot better. Let's say they continue to decrease their I think market optics can push something. But I think it would be more of like it would be an overreaction to something bullish, and it wouldn't be something sustainable. Can we hit that level? Can we hit possible? But it wouldn't be sustainable, right? The market is extremely volatile. Let's say, let's say tomorrow or next earnings, every capex player, every company says, look, capex, we need to go higher and higher because some crazy AI innovation happened, and it just pushes every AI infrastructure up. Um, Again, I wouldn't think it's sustainable, but is it impossible? I don't think so. All right. All right, guys. I do have a meeting I need to get into. So I have to head out, guys. I hope everybody has a good weekend. Like always, I appreciate you guys. What the heck did you do? We have Simon here. What the heck did you do to the market, Jose? I've been live streaming. I guess that's the issue. Maybe I should stop live streaming. I've been live streaming, and what now that I start live streaming, things go bad. Maybe I should stop. Was that the thing? But no, Simon, I'm sorry. I'm sorry for breaking the market. But regardless, guys, I need to go to a meeting. So I'll catch you guys later. I hope you guys have a great weekend. Remember, this AI market is completely volatile. Things suck. But I think what we're hearing in forms of data, and I'm going to continue to say this, the data shows us that the demand is crazy. We're actually seeing growth in AI solutions. Um, and yeah, hope everybody has a good weekend. Have a good time with the family. Have a good time with your significant other. If have a good time by yourself, gaming, whatever you want to do this weekend, enjoy. And I'll see you all on Monday around the same time. So peace out, and time for me to end this live stream. Hit the thumbs up and subscribe. And also check out whatthechiphappened.com. Use code. You don't even need to use the code to get 33% off.